I think you're absolutely right. We have seen an evolution in the demands of activist investors. Governance and governance concerns remain the primary request that we see activists putting into corporate management teams. However, we've seen a significant growth over the last 2-3 years, I would say, in demands related to operational improvement and strategy changes at large corporates. Indeed, that's what we at Alvarez & Marsal work very closely with our clients on in driving that operational transformation. I think it's also worthwhile calling out that we are seeing a growth in what we term constructive dialogue. Right? So not all activist interventions are now public. In fact, in Europe particularly, we've seen a significant growth in private interventions, right? Where investors are coming to corporate management teams with strong ideas, strong dialogue, strong pushback, and those corporate boards are responding very constructively.
Why are you advising private rather than public dialogue? If that's the trend that's happening, I'm damn sure that you're advising that. So tell us why.
Well, I think it's always helpful on the part of corporate management teams to not be defensive, right? No one has a monopoly on good ideas, and I think it's part of the role of a corporate management team to take on great ideas for operational improvement and strategy changes from wherever they may come. Now, of course, no one knows a business better than its own board and its corporate management team, so all those ideas need to be stress tested. But I think we're seeing European boards increasingly confident in how they're interacting with activist shareholders.
We were having a conversation earlier about the UK market being in the slow lane versus other international markets. And Independent put together a piece talking about where those activists have been involved. Sevian in Smith & Nephew talking about not generating shareholder value for years. Watches of Switzerland, Gate more active there, calling on a stock market listing New York, not London. And that has been a regular theme where there's been a lot of push for those listings to be rethought. Rio Tinto about scrapping a primary listing and focusing on Australia as well. Just talk us through whether there is a genuine case the performance can be lifted fairly easily. There's a lot of low-hanging fruit on the UK market.
I think UK and some other European markets have seen persistently low valuations, right? If we look at the Euro Stoxx 600 over 24, I think it delivered a return of 8% versus 28-29% for the S&P 500. Activist shareholders are looking for the ability to unlock value, and I think when you've got markets with persistently low valuation, there will be pockets of value there that can be significantly unlocked. The UK is the most attractive market in Europe for activist investors. In fact, in 24 we saw 40% of public activist campaigns within Europe being launched in the UK market, and we expect that to be a continuing trend into this year.
What is the danger for the FTSE 100 for the stock market here in terms of holding on to some of these big name companies? Because it has been an ongoing theme since Brexit that companies are upping and leaving. A lot of them are going to US markets, but I mean this other story around Rio Tinto suggests to Australia. So it is across the board we're talking about companies looking at opportunities elsewhere. If we see a flood of companies leaving, that does leave the UK market in a perilous position, doesn't it?
There are always questions around future liquidity of the UK market. However, I think the calls for changes of listings are actually a minimal set of the calls within activist shareholder demands, right? As I said earlier, the big growth has been on operational and strategic changes. So even while retaining the current listing in European markets, there's still a lot of improvement that activists can drive with European corporates.